नमस्कार साथीहरू, वेलकम अल अफ यु टु माई च्यानल। आजको डिस्कसनमा हामी चाहिँ मेथड्स अफ अनकलेक्टेबल अकाउन्टको बारेमा छलफल गर्नेछौँ। अनकलेक्टेबल अकाउन्ट्स भन्ने बित्तिकै वेन वी हेभ अ क्रेडिट सेल्स and we say that certain sales would not be collected, then that is simply called the bad debt, friends. Within due date, if we are unable to collect the figure, then we say that that is the uncollectible expenses. Now under this approach, basically how we accounts for this bad debt, we have two approaches. One is called direct write-off method for the bad debt. This is all about suppose you sold the goods to the customer and within due period, for example, let's say the 90 days, you are unable to collect your receivable. Then in that case, you would write off that accounts, and then how we would record the journal entry, that is the case of direct write-off approach, friends. Now look at this simple example. In this case, that's a sale of 1 lakh, right? Is the robot corporation makes the 1 lakh sales to Dexter Incorporations, and in this case is the on the November 1st 2024, we have a credit sales of 2 by 10 net 60. That means seller would provide you 2% cash discount if buyer would pay, a debtor would pay within 10 days, and total credit period is the 60 days. Now how we record the journal entry in the books of Roberts, right, is the seller after pursuing the account for the even 4 months into the up to on the collecting the 1000 from the Dexters and advises the account department to write off that account. That means, as I explained earlier, friends, if we are unable to collect our receivable on time, then even though as per this question also, even waiting for the 4 months, it has not been collected. So your first journal entry would be just for account receivable, account debit to sales revenue, right? And how we would record this one, so it's effect in the balance sheet, that is accounting equation. Asset equals to liabilities plus stockholder equity, and account receivable is simply the one of the important component of current assets, so you say that account receivable, and stockholder equity is also the 1 lakh. Now you might have question about how it possible, right? Then in income statement, look at this one, revenue minus expenses is the net income, right? So revenue itself is a 1 lakh, right, based on your accrual accounting system, and this is your net income. So net income, if we have a positive, your stockholder equity would be also positively affected, right? Now let's move to the other part. Now after this is the just for 2 months credit sales, and despite waiting for the 4 months, this seller unable to collect the dues figure, so is write off that account. This is the simply case of bad debt written off. So on this date, that is the May 1st, bad debt expenses account debit to account receivable is the amount 1 lakh. Now yeah, you can say that bad debt expenses, or you can say that uncollectible account expenses, right? And you could mention narration as well, write off Dexter accounts. Then next one is that look at the term balance sheet and income statement, right? In balance sheet we would have a negative figure, since it confirmed that you are not going to collect that 1 lakh amount, so you would have a negative stockholder equity. Reason is that this is expenses and this is also net income. If net income is negative, then your equity will be also negative, right? And next approach is that we have allowances for bad debt. Under allowances, or you can say that provision for bad debt, right? We have a two approach again, friends, that is called percentage of sales approach, and next one is called percentage of receivable. Under percentage of sales, what we do, based on the prior experience, the company can reasonably estimate what percentage of the sales will not be collected, right? This is simply the case of percentage of sales. However, if you are given even the debit balance and credit balance, you are not going to consider, by the way. But at the same time, under percentage of receivable, as per need, we have to prepare the T accounts, right? Then we have to adjust debit balance and the credit balance for doubtful accounts. Then we have to prepare adjusting entries accordingly, right? Now let's move to the discussion on the one questions. Let's see the example number 4, friends. ABC company had, we say that is the we have a 50 lakh credit sales is there, right? And however, out of this 50 lakh current account receivable, we say that this is 39 lakh, and allowances for doubtful account has a credit balance of 7,000, and historically 10% of the account receivable ending balance is not collected, right? And we have a bad debt written off is 10,000. Now you are asked to prepare the adjusting entry with required working notes. So as I explained earlier, it would be good to prepare your T accounts like this, right? Is the beginning balance, credit balance we have given 7,000, and 39,000 is simply 10% of this value would be your, this is 39,000. Now when you are adjusting your credit balance, that means 39,000 minus 7,000 would be your expenses adjusted. So your adjusting entry would be simply, this is bad debt expenses account debit 32,000, and allowances for doubtful account is 32,000. Yeah, you can see here that is the uncollectible account expenses to, or bad debt expenses account debit to provision for doubtful account, we can also say it, right? Okay friends, basically you might have question also, in what condition there will be debit balance or under what condition we have a credit balance. Simple case is that if we overestimate the probable bad debt friends, then in that case you would have a credit balance. Overestimate, I'm talking about your past, prior, last year case, then you would have a credit balance and you would be adjusting in coming days, right? That is the projections. But at the same time, when you underestimate your probable bad debt, in that case you may have a debit balance. If we have a, say in this case, if we have a debit balance instead of credit balance, then simply you would be adjusting like this. This is 10% of this 39,000 plus 7,000. So 39, this is 40, 46,000 would be there, right? So you have to first of all read the question carefully and do your needful calculation, and accordingly you could solve the question friends. Okay friends, I hope whatever I discussed today, it would enrich your understanding level of methods to account for bad debt. If you have any questions, please let me know. I try to clarify the points by following the other reference study material too friends. Okay, thank you friends, all of you for watching this video. Please take care friends, and also subscribe my channel, that is the Finance Guru Pawan Kumar Jha. Thank you.